Hello and welcome to Consist. The entire world is watching with bated breath the battle between the Wall Street elites and mom and pop traders who banded together through social media. This is a real battle, a sort of battle between David and Goliath. And for once, it does look like David is winning. You know what? I think David has already won. That doesn't mean that the giant is going to pack his bags and leave, but for once, the elites of the Wall Street have gotten a bloody eye and they have to live with it. So, what exactly happened?
Short interest in GameStop.
This GameStop situation is the craziest I think I've ever seen.
We have some breaking news right now on what has turned into the soap opera and saga of the markets right now, and that is the story of GameStop.
GameStop has captivated Wall Street's attention. The stock's rise has been otherworldly, but the obsession isn't just with the rally, it's with who's making money off of it.
GameStop is a US-based video game and video game related electronics company. But in the world that was moving so quickly online, in the world of Netflix and Amazon Prime, anyone who is going to run a retail style walk-in stores is going to be hurt, isn't it? GameStop was as well. Things were not going great for the company on the sales front as more and more players moved online and started becoming smartphone players, making direct purchases from their fingertips. As the Xbox, Sony Playstation and Nintendo squeezed GameStop from one side, Apple App Store and Android App Store squeezed them from the other. Caught in the middle, quarter after quarter, GameStop kept reporting losses. 2018 was the worst year as the company lost $673 million. GameStop was trying to get out of the jam, with revenue still hitting above the $6 billion mark. Maybe they still have the room and strength to figure out a way to coexist with all the different online players they are competing with. But Wall Street has seen the blood, and we all know what happens when you spray blood in shark-infested waters. Some of the big names in Wall Street started to short GameStop, a bet that would make money for the short seller if the company's stock price drops in value. GameStop became one of the most shorted stocks in the market early this year, with hedge funds piling on billions of dollars trying to take advantage of a drop in GameStop's value. Under normal behavior, shorting, the act of making a bet that something will lose value, can be as important as going long, where you make a bet that the value will go up. As both sides engage in opposite direction, it increases the liquidity in the process, meaning you will have more people trading when you have both short holders and long holders instead of having only one side in the game. But this act, the act of shorting, has become a tool in the hand of Wall Street at times to even push the companies to the brink. Have you ever seen a hedge fund guy come out on TV and bash a company? A lot of them would have gone short and be using their TV appearance to beat down the company. The number of times some of these hedge fund morons went on live TV to tell us that Tesla will be bankrupt.
It's not a major position for us, but in our view, the company's likely.
So how much truth was there in what they said? Did Tesla go bankrupt? Nope, it didn't. It is one of the most valued auto companies in the world today, and is also the only auto company that sold more cars than they did in the previous year for possibly the last 8-9 years. So many investors, big and small investors, have been watching this go on and on forever. I can cite plenty of examples of how hedge fund guys have shorted the stock and started deploying propaganda to ratchet up the pressure on public companies. Sometimes it worked, sometimes it didn't. But at the end of the day, so many companies have suffered at the hands of these Wall Street sharks. Some CEOs may have deserved it, but at the end of the day, people were getting fed up with these guys. And what happened last week? The way a subreddit became the fulcrum for rallying the GameStop stock is a big, bold message to the Wall Street and to the SEC that something has to change, and Wall Street cannot keep getting scot-free with anything and everything it does. So this R Wall Street Bets is a subreddit where people talk and share their trading strategies and all stock and option related stuff. Also remember, this forum is unlike other forums on Reddit where few thousand people meet online and share things. Wall Street Bets is followed by nearly 6 million users. The recent publicity would have certainly increased its following. So someone must have been watching the astronomical investment Wall Street had made against GameStop since the second half of 2019, and it was just going up and up and up, as you can see from the chart to my right. See how it went through the roof? As you can see, by early January, the stock was shorted more than 100% of its float, meaning the number of stocks that were shorted were more than the number of shares outstanding. I still don't have any idea how and why on earth SEC allows this to happen, but it happens. Imagine an airline you're traveling has 100 seats, but it regularly allows 140 to 180 people to reserve them. You will be furious and someday you will sue their asses out. But it's all well and fine on Wall Street. So someone is saying this, that the shorts have gone overboard. There are more stocks that were sold short than what is available for going long. Then the chatter starts in the Reddit forum to take the opposite side. If enough people buy the stock, that will cause the stock price to increase. And if it can be moved, if some momentum can be provided, then more traders will follow the stock in its rise. And if the stock's value keeps increasing, the shorts will be forced to cover their position. So to cover their short position, they will have to buy more stocks, thus creating what is called as short squeeze. And it worked perfectly on this occasion. The overstretched shorts scrambled to cover their position as the price of GameStop kept increasing. The squeeze was so hard that Wall Street lost, the short sellers lost $19.75 billion in January and lost nearly $8 billion in one day, Friday, as GameStop price surged to more than $300 from $18 in the first week of January. Now, some of these hedge funds, the know everything guys, are coming out one by one out of the woodwork claiming that this was some stock manipulation and whatnot. It's a boatload of bullshit. So who caused the 2008 recession and how many of them are now behind bars? As far as I heard, there was one guy who got arrested, but I know so many people, countless people, who had nothing to do with anything that happened in 2008 but still lost everything they had. Lean Cooperman, the 77-year-old founder of Omega Investors, a typical hedge fund billionaire, if you want to call him one, went on CNBC and said, the reason the market is doing what it's doing is people are sitting at home, getting their checks from the government, basically trading for no commissions and no interest rates. How sweet, Mr. Cooperman. The reason why Wall Street guys are so emboldened is because they are sitting in their cushy offices, getting windfalls from the government, and basically getting away with bending the rules as they see fit. Remember the $1 trillion tax cut the Trump administration gave to big businesses? The biggest beneficiary of those tax cuts was hedge funds. So as long as they are at the receiving end of checks from the government, it's absolutely fine. But it is abominable when mom and pop traders use their own money to trade and have a chat about it on Reddit. Make no mistake, this is one incident, and it does feel like Murphy's Law. What can happen happened. Everything fell into place for the GameStop short squeeze to take place. The shorts were overstretched. The stock price made a small move and the momentum kept building after that. The media jumped in, elevated the story. More and more mom and pop investors joined the party, and the short squeeze kept getting stronger and stronger, killing several big name Wall Streeters in the process. It may not happen again, but the next time the Wall Street guys try to short a company and go around on TV talking about it, they will think 10 times. They will have to create a contingency plan to avoid a GameStop-like squeeze, while mom and pop traders, fueled by the possibility to connect via social media, will keep hunting for the next squeeze. So this is the first time retail investors, as far as I know, have given a damn bloody eye to Wall Street, and I am sincerely feeling happy about it. It feels like a very small payback for how Wall Street wrecked us in 2008. Stocks can go viral now, Wall Street, and you can do nothing about it. Listen to Jim Bianco, founder of Bianco Research. The future of Wall Street may not be with Wall Street as much as they would want it to be.
This paradigm shift in investing isn't going away. Even if an overvalued equity market suffers a big correction, the playing field is changing. Jim joins us now for more. Jim, I've been looking forward to this conversation this morning, sir. Great to catch up. How's it changed, and how long will it change?
Oh, I think it's changed. It's changed for a long time. Look, the retail investor has every tool and the availability that every one of your guests, including me, has. They've got free trading. They've got fractional shares. They've got all the information that they need. They've got forums that they could discuss ideas with. There's very little an institutional investor can bring to the table that a retail investor doesn't have, except outperformance. And unfortunately, many of those institutional investors just don't bring that to the table. So the retail investor is taking it upon himself to start investing their own money. And since the spring, they have largely been winning in almost every trade, whether it was buying the airlines after Buffett got out of them, or what we saw with the work from home stocks over the summer, and now going after the short sellers right now. They've got just one win after another, and it's been quite remarkable.